Where I want to start out here is a few huge things. Okay, U.S. commercial growth continues to be absolutely phenomenal on what Palantir calls the AIP revolution. 40% U.S. commercial revenue growth on a year-over-year basis, 14% on a quarter-over-quarter basis. So a very nice sequential growth. U.S. commercial is a whole different growth stratosphere. 69% year-over-year growth in U.S. commercial, 19% quarter-over-quarter on the customer count. So it's very important that we're still seeing growth not only on a year-over-year basis in a substantial way, but on a sequential basis as well. That's something you want to look at to kind of figure out, like, is a company going to be able to continue to grow at very fast rates or not on a sequential basis? Then I thought this was probably the most overlooked thing, what I'm showing you right there, okay? U.S. commercial remaining deal value, 74% up year over year. U.S. commercial remaining deal value was up 14 percentage points on a quarter-over-quarter basis. On top of that, U.S. commercial total contract value was up to $286 million, and check this out here. 131% year-over-year growth in U.S. commercial total contract value. That's big, folks, okay? That's backlog. That means, the business is going to be looking very wealthy, healthy, and stealthy for quite a while to go in the future, okay? Now, also, check this out. We achieved GAAP profitability for the 6th consecutive quarter. Look at this GAAP net income, right? You look back a few quarters ago, they were losing $100 million plus. Now GAAP net income of over $100 million. This is something I saw coming long before they actually flipped that profitability, but you could see the financial statements getting in that better and better place. And sure enough, they have flipped it in a massive way, man. What a change in a matter of just a few quarters. Imagine what Palantir can do over the next 5 years. I mean, Palantir's been able to pull off this miracle in a matter of a few quarters. I mean, what can they do over the next 5 years, 10 years? I ask you that, right? GAAP operating income. This is important because, I try to always hear out bear points or anybody talks negative about a stock that I hold. I want to hear out, what do they have to say? Well, in regards to Palantir, there's not much you can say, but one of the things, at least last year, was, well, the company was not looking good on an operating income basis. Yeah, they were profitable in the bottom line, but it was just because of interest income. Well, when you look at operating income, that does not factor that in. So GAAP, and this is, you can't cheat this is generally accepted accounting principles, okay? It's not like it's a non-GAAP number. This is GAAP operating income. So check this out. If you go back to Q3 2022, about a $62 million GAAP operating loss, and now they've gotten to a place where this past quarter, they just grew nearly $81 million of positive operating income, looking very good. Look where they were at this time last year, $4 million. What a change. Commercial revenue growth, 27% up year over year. U.S. commercial revenue growth up 40% year over year. Now, what that shows you, very important to understand, is the U.S. commercial market is growing rapidly, very, very quickly. Now, in regards to conference call, and we'll talk about some other important things on the conference call, Alex Karp, when talking about the international market, he says it's a bit of a struggle in that market for two reasons. One, he talks about the economy, and he talks about the economy in Europe not being too good and flatlining potential GDP here. He also spoke about just kind of an overall, just international market in Europe specifically. They just don't move fast enough. U.S. companies are very sold on AI and how it can help transform their businesses and things like that. And, a lot of the European companies, they just move slower. So that was kind of something he spoke about there. Now, in regards to something that it was very hard to find bad things in this quarter, very hard. But if you want to know one bad thing, maybe in this quarter, I'll show you the one bad thing for Palantir. Here it is right here. Government revenue, 16% up year over year. Now, improvement, no doubt, but it's a very slow growing situation. U.S. government revenue growth of 12%. Very sleepy numbers for Palantir, right? You look at that growth rate and you look at this growth rate, we're over a 3x. U.S. commercial revenue growth is over a 3x of what U.S. government revenue is, right? So keep in mind, the commercial business is such a smaller business, right? So to be helping out the overall numbers more, the growth rate has to be ridiculous because you're coming off of a base of a lot smaller base, right? Versus government is a $200+ million business, and this is like $100 million something business, right? So just a little food for thought in regards to that. This is one of very few holes you can poke in the business. Government business is just weak, relatively weak, I should say, right? Q1 2024. Adjusted operating income. I don't like adjusted numbers. They're not my favorite, but a lot of people do put emphasis on adjusted numbers. Adjusted operating margin came in at 36%. Whew, it's a good number. And then $226 million there of adjusted operating income versus if you go back to this same quarter last year, 24% adjusted operating margin there and $125 million. Huge improvements year over year for the company. U.S. commercial customer count. 69% year-over-year growth. Wow. 19% on a sequential basis quarter over quarter. Customer count grew 42% year over year. Love to see it. And another 11% on a quarter over quarter basis. That's great to see that acceleration. Look at that. 8%, 8%, 10, and then up to 11% there, right? Love to see that. Commercial customer count grew 53% year over year. I mean, look at that, from 8% to 9%, 14%. Commercial customer count, phenomenal. One of the things they showed, I didn't prep this as a slide, but there was something I saw that was really amazing, okay? I'll tell you that in just a moment. During the first quarter, 87 deals closed of at least $1 million. Oh my gosh, it's insane. 87 deals of at least $1 million. And that's just in one quarter they closed that many. 27 were at least $5 million, and 15 of which were at least $10 million. Woo-wee! I love it. Now, there was an important slide. I wish I would have showed you guys this slide. It was in their, if I recall, their presentation, Palantir's presentation. I thought this slide mattered significantly. It was from General Mills. And what General Mills said is they said that basically Palantir was able to save them about $14 million annually. And they said this was only, Palantir's product was not even distributed throughout the organization. It was only in one kind of segment. Now, the reason that's so huge is remember what I always tell you guys about Palantir. What I always tell you guys about Palantir. All that matters, people say, oh, the product's so expensive. People spend $1 million, $5 million, $10 million plus on the product. It's so expensive. Their top customers spending an average of $55 million a year, some insane amount on Palantir. Yes, it's a very expensive product. There's no doubt about that. But all that matters at the end of the day is Palantir saves you or makes you more money than what you spend on Palantir. And so the General Mills example, General Mills is using that in part of their business, saves them $14 million annually, right? Let's say hypothetically, General Mills is spending $7 million a year for Palantir software, right? Well, if Palantir is saving General Mills $14 million and they're only spending $7 million, it's a 2x ROI. It's a no-brainer. You're going to stay signed up for Palantir for years and years and years to go in the future, right? Now, on top of that, it's only used in one segment of General Mills. So if it's that successful in just one segment of General Mills, well, General Mills is going to probably want to expand Palantir, which gives them, it's not just about Palantir is going to try to grab more and more new customers. It's about Palantir inside these big companies, because these companies are massive, having a success inside that organization, and then being able to sell to this other segment of organization inside the company, right? That's the magic with Palantir. That's the true magic. It's multiple opportunities all at once, right? And so hopefully, let's say they have a $7 million a year contract with General Mills. I'm just throwing that number out. I have no clue what their contract is. I'm just throwing it out, $7 million. Well, if they expand much more rapidly, next thing you know, they might have a $10 million, $15 million, $50 million contract with General Mills before it's all said and done, right? If they can really help offset that. It's very important to understand that. Now, on top of that, they ended the quarter with $3.9 billion in cash equivalents, U.S. Treasury securities, and no debt. They are set up very well. They're doing a little bit of their share buyback, but it seems like they're very focused on making a lot of money from treasuries right now, which my opinion is suck up as much money as you can get from treasuries right now. I think all companies should do that. I think Apple should do that as well, rather than focus on buybacks. Suck up every penny. because I don't think you're going to be able to get 5% plus from treasuries forever. And so I think if you can lock in that 5% plus and you're a big company, you have money sitting around, lock it in right now. Get that 5.2%, 5.3, whatever, and let that money roll in. Because we know once the Fed starts cutting, they're going to probably keep cutting and keep cutting. And then if the economy ever goes really south and unemployment goes up in any substantial way, we know the Fed's going to cut to probably 2% Fed funds. Or if things get bad enough, they'll cut all the way down to under 1% again. They'll cut down to 0%. And then you're getting no 5-point-something% on treasuries anymore at that time. So, I don't think we have forever to get 5% plus on treasuries. Now, if you look at their guide here for the next quarter, they guided for a midpoint of about $651 million. Analysts were at about $643 million from what I saw. So, we can call it about $8 million beat there. Keep in mind, Palantir could be sandbagging that a bit. So midpoint's, 651. Maybe they come in with the 655, 660, 665. I think Karp and the team is understands a little bit of the game of Wall Street and making sure you don't put a number out there that you're not going to hit, because it's very embarrassing. It's usually very negative for stock price. No one wants to see the headline about Palantir misses on revenue, right? So it's a little food for thought in regards to that. Now, this is important. The full year. Okay, the full year guidance was supposedly lighter than analysts, but I looked and it looks like it's roughly in line with where the analysts are at from what I saw. But CNBC's headline, oh my gosh, it was ridiculous. CNBC's headline said, "Oh, Palantir's got light revenue," and I'm like, what? What are they talking about? I looked at the numbers. I'm like, basically, this like the same numbers. If you do keep in mind, Palantir's probably sandbagging, right? Look at their growth rates. Look at how much momentum they have in the business model. Probably sandbagging there. Probably, okay. U.S. commercial revenue growth, they're guiding for the full year, $661 million, representing a growth rate of at least 45%. When a company says we're going to grow at a rate at least, that's basically a way of a company saying, we're going to grow so much, we don't even know how much we're going to grow. It's just going to be a lot. So we're just going to throw out a number that we know we got in the bag, and that can be that, right? That's where Palantir's at least 45%. That's a flexing of a number. Adjusted income from operations, they're talking about $868 million to $880 million. Adjusted free cash flow, $800 million to $1 billion. GAAP operating income and net income in each quarter this year. That does not come as a surprise at all to me. Now, Karp, he said a few important things in his letter to shareholders, I thought, okay? First up here, he says, our business is now growing at a scale and a pace that even our most ardent advocates, Karp's always got to use some random big word, right? It's not even a big word. It's just a random word. Like, who says ardent? Advocates would have been hard-pressed to say was likely or even possible. We generated $634 million in revenue in the first quarter of 2024 alone, representing 21% increase over the prior year, and significantly surpassing the upper end of our guidance. In addition, the profits we promised would come, and the skeptics repeatedly and confidently said were beyond us, have now arrived. In the 3 months ending March 31st, 2024, we earned $106 million, the largest quarterly profit in our company's 20-year history. For comparison, we now earn more profit in a single quarter than the amount of revenue we generated in an entire year a little more than a decade ago, right? And so that was just kind of, in my opinion, Karp flexing on the haters a little bit there, the short sellers, those sorts of folks, because, definitely Karp in Palantir, they're one of those companies that attracts a lot of, people that don't like it. They don't like him. They don't like his approach. They don't like his arrogance sometimes and those sorts of things, right? This shows you the net income by quarter over time from $17 million at this time last year to now $106 million. Woo! Woo! Over a 5X, folks. Our central insight and the most foundational commitment is that software products we are building, their strength and sophistication must remain at the center of our company. We've been investing in and refining our enterprise software platforms for years, and a growing portion of the American corporate sector is now coming to us, more aware than ever how significant artificial intelligence and large language models, LLMs, will be in reshaping the industries within which they operate. Now, that's important because key word is American corporate sector is now coming to us. It's always a great feeling when you as a CEO or you run a business and you don't have to chase down your customers. Your customers are chasing down you, right? That is valuable. That is great. You love that. If you were a company that was, you made custom closets, you wouldn't want to necessarily have to hunt down customers and hope to find rich people to then kind of throw your business card out there and say, hey, I build custom closets. You want a custom closet in your house. It's much more better if those people are coming to you and saying, hey, I would love you to build me a custom closet, right? That's important. It totally changes the value proposition. Other companies engage in intricate and elaborate efforts to sell and market their offerings. Their resources are focused on marketing at the expense of actually constructing the software and building the systems that they hope to sell. We've taken a different approach. We are now investing even more heavily in simply leading potential partners to use our software in order for them to decide what works for them and not for what does work and not for themselves. Now, that's shots at competition, right? Because Karp has a view, and this is not the first time Karp's taken shots at competition. He's done that. He's got a viewpoint of these companies will, create some sort of initial product, and then that's about it. And the product, is not what the customers thought it was, right? And they don't really focus on making it better. And Karp says, we really focus on the product and making sure the product's a banger and making that product better and better and better, right? So a few things to kind of keep in mind, I think, that are important in regards to Palantir, okay? First was, before we even get into valuation, those sorts of things, and some of the other things, shaking things up, the numbers were phenomenal. There's no way you can look at those numbers and not say that's phenomenal. Their balance sheet is as pristine gets. Their income statement is improved so much. It's insane. They're now making over $100 million a quarter in net income. Their revenue is obviously flying up 21%. That's even despite government business being weak right now, right? Which is kind of out of their hands. Government's going to be weak. Government's going to be weak, right? If you look at their commercial customer count, everything's going great. Conference call was very solid last night. There's no holes in the business. Everything's very good, right? But with that being said, when you are a stock, right, that essentially has a higher valuation on it, sometimes your expectations get so over the moon, right? And so that's why I told you guys in yesterday's video, if we saw like a 25% plus revenue number, we would have been flying up today, right? But it came in at 21%. So 21% is not 25%, 26%, 27%. So that could lead people to, the shorter term people, to say, oh, the momentum's not there in Palantir, right? Because we didn't see some epic number that people blew people's mind, like, oh my gosh, can you believe Palantir grew at this type of rate? And so as a long-term investor, you would have loved everything in those numbers. But as a short-term, more momentum swing trader type person, right, you're going to look at those numbers, you're going to say, yeah, business is good. It's a little better than expected. They beat revenue, but it's not that outstanding to push this stock up to $25, $26, $27 here in the short term. Now, how do I look at it? Well, I look at it very simply. I'm a long-term investor. Everything's headed in the right direction, exactly where I want it. And so I like everything that's lining up here. And it's irrelevant. Palantir could be 21 today. Palantir could be 27, 29, 32, like 26, 50. It doesn't matter. It doesn't matter to a long-term investor like me, because I'm not selling the stock today, regardless of what price it was at. Well, maybe if it was at like 55, I might sell some shares today or something like that. But nowhere even remotely close to these prices, or am I even interested in selling. So it's really irrelevant in the end, right? And so that's just kind of an important thing to remember about these stocks. By the way, 1000X, baby. We just got them in. Just arrived in my house. The membership cards. Oh, yeah. The membership cards arrived. Founders Series, folks. So if you want to be one of the folks in the Founders Series, 1000X, once you join, we send you one of these in the mail. Ooh, that's nice. That's nice. What do you like better? 1000X cards or the private group cards? Both are pretty cool, man. I don't know which one's better. But anyways,